Hey guys, hope you're doing well today. My name is Tony, and this is going to be another technical analysis of the S&P 500 index. In today's trading session, we have gone up a little bit today, but have fallen right back down. So we're mostly flat for today. This could be a shooting star and the beginning of a reversal after quite a large rally from where we were just about 2 days ago when the markets crashed below 3,000 on fears of a second wave of coronavirus infections. We have since then rallied pretty nicely, and here we seem to be cooling off a little bit, but still the markets appear to be holding pretty strong. The news today is that although the weaker parts of the economy, such as the airlines and the cruise lines, continue to be hit, hardest hit stocks today appear to be the cruise lines and the airlines. But however, on the other side of the market, a lot of the tech stocks are doing pretty well. In recent days, a lot of the individual stocks that are African American owned, such as Carver Bancorp, and yesterday I believe it was Radio One, they appear to be skyrocketing, as there are news that these days a lot of individuals are going to be investing in black communities and black businesses. So naturally, black-owned companies seem to be doing exceptionally well. Besides that, the S&P itself does not appear to be too eventful. I think it's important to see where we move in the future before we can make a very conclusive statement about whether we will continue to move higher or if we'll make a reversal and go lower. I think in the short term, though, this is doing for a bit of a pullback, given that we rallied pretty hard. And you can say that, well, this rally only came after a bigger drop, but again, it would appear that large drops in times of bad news are to be expected, and retracements aren't as fast as the drop itself. For instance, while we have recovered quite nicely, the drop here recovered, but not as fast. And so, when you see a drop like this, you don't really expect like a huge dead cat bounce all the way back up here if the drop is somewhat large. But it's possible that we continue recovering, just not as quickly. Still, though, I think that in the short term, the markets do appear to be a little bit overbought, given the news, that is. And so if you take a look at the short-term fib retracement over here, it does look as though we are struggling to break above the 618 level and hold it. In fact, we're sort of just dwindling at around the 0.5 level right now. If we can't close above this level, I would imagine that we would move lower. However, there are going to be many areas of support, the 3000 level being one of them, and naturally the area here, which I've mentioned quite frequently, as acting as a very large area of previous support, which would provide a lot of evidence that we will not move below this level in the long term. What I would do right now, however, is that I would sort of stay away from the markets if I'm not currently invested. If I was all in long, I'd perhaps cut a little bit of the current holdings. For me, my personal investment strategy is more of a bargain hunting, and so in the current environment, I would probably look for cheaply discounted stocks. If you're buying into the S&P right now, I would look towards some companies which are not doing as well, perhaps some daily losers. Moderna seems to be pretty cheap. Some of the banks are actually doing pretty well recently. Roku is one of the cheaper tech stocks given where it was before. And in general, if I was continuing to hold long, I would perhaps look towards some of the more discounted stocks. I think the tech stocks right now are in a little bit of a bubble. I think the valuation is not quite justified. I think people are simply moving the money away from weaker companies and moving it into stronger companies, but I think they've done so to an extent to which the strong companies such as Apple, Facebook, Microsoft are a little bit overvalued. Like Apple right now is trading higher. In fact, it reached all-time highs today. It's trading higher than it ever was, essentially, just a few hours ago. But I don't know if people are too interested in buying phones right now, especially given that the economy itself hasn't entirely recovered. I think people have moved a lot of money in here just on a fundamental basis that it's one of the few viable long-term investments, since Apple stock has been known to perform very well and most likely will continue to perform well. But still, I don't think that its valuation at the moment of $1.5 trillion makes a lot of sense. And agree to disagree, but I I don't know. Personally, I feel as though this might just be another bubble. At the very least, I would imagine that there is going to be a time in the future where you can buy it at a cheaper price than you can now, and so I'm not quite interested in buying into the strong side of the economy. Um, but again, you can argue with me, and I've said that a few times, and in the past I was wrong. I would have said Apple was probably going to go down as well, and I was wrong there. So it's quite possible we go higher. But when I'm managing my own portfolio, I feel as though they're just simply safer picks. There's discounted stocks in the market right now that I would be more interested in purchasing. A lot of biotech stocks seem to be doing pretty well if you know which one to pick. There always seems to be a really good bargain on certain small caps. As for what the Fed's doing, I believe there was some DOJ news about looking into what the tech companies are doing. I didn't read too much into it, but I don't think it's too big of a financial impact on these companies, given that tech stocks continue to do very well today. The S&P is flat, but NASDAQ is up. In terms of what Superman Powell is doing, he said he'd buy bonds, but I think he said that he's going to buy individual bonds rather than ETFs, which perhaps just suggests that he's going to be looking towards the companies that really need short-term relief rather than some of the companies that have a sustained cash flow, at least for the time being. We look towards volatility at the moment, and it is down quite a bit, but interesting to note, it's it's still quite elevated compared to where we are here. I think coronavirus is still in the air, both literally and metaphorically, as in I think we might see more news regarding it soon. Gold is doing pretty well. It's still holding up a little bit. I think gold is kind of struggling to break higher at this level, but I think it's only a matter of time before we go higher in the long run. So with all that being said, I thank you very much for listening to my analysis on the S&P 500 index, and I wish you best of luck in your trading. Take care.